All right, well, welcome to the Boring Millionaire Podcast, Episode 5. My name is James Lamantia,
I'm Nick Polari.
and we are here to help you get started in the stock market, and we are here to help you feel confident within your money. So today is Friday, December 6th, and right now, in the middle of the trading day, we have the S&P at 6,081. We have the NASDAQ at 19,820. And we're basically coasting right at record highs, which is great. It's a very calm environment. But, with this environment, what are you looking at this week?
I'm taking what we were talking about last week and using the $50 strategy. So I have 50 and I'm putting 10 into each company. So the companies I would pick, my first one would be Waste Management. If you look at the chart, it has steady growth. So just over time, it's been killing it. Neo, but also on the end of Neo, it wouldn't be fractional shares since it's trading around $4. So you would actually get 2 whole shares of the company. And we've talked in previous episodes our faith in the company and also why they have pretty good advantages. Coinbase, there's a lot going on in the crypto world.
There
and
is.
They are pretty much the lead broker in any kind of crypto transaction. So a lot of people use it. They're trading pretty high also. And I believe in the presidency, he's come out pro-crypto, Trump. So I believe that it's going to continue to grow. More people will get into crypto. PayPal. I like PayPal just as a company because I feel it is a safe way to have online transactions. So they're working on growing their margins. So they're going to have more money coming into the company that they can use, again, to reinvest in the company. So I believe that is a good one. And then finally, on my last one for $10, I have Microsoft. Microsoft is just an overall strong company. They have Windows. They own Xbox. They're a leader in a lot of the cloud services that they have.
They are. They have a strong grip on the cloud services market. They are basically the leader in software. Bill Gates, one of the pioneers of software. But I love that $50. I love exactly how you're spending it. And I'm glad that we're getting right into the $50 method because it's a very convenient and easy way for somebody to budget themselves appropriately and to get into the market at a very novice entry level pace. So with my $50, breaking it up into $10, I'm buying UPRO, which we have praised in previous episodes. UPRO is a double weight S&P 500 ETF. So that's just some foundation in your portfolio, getting right into the market as a whole. I also have Lennar Home Builders. I think with the interest rates coming down and a new economic environment, they are going to propel themselves further with the projects that they take on, as well as I think in time with the lower interest rates, we're going to have more incentive buyers in the real estate market. Another stock I'm picking with my $10 is Caterpillar. Just can't go wrong. Always had Caterpillar. I have FedEx and I'm buying McDonald's. One little secret about McDonald's I always kind of like to bring up is it's not so much a fast food company. It's really more so a real estate company. They own essentially all of the real estate that you see a McDonald's located at. And, real estate is key. So
Yeah,
I love that
really
company for those reasons, as well as McDonald's. All of them except the ETF, they pay a pretty sound dividend. So not only are you getting some solid blue chip companies, something comfortable to put your money in, you're getting paid an income while you're doing it.
No, yeah, I agree with everything on there that you said. The safety is nice. Like I said, I brought up Microsoft. Even alone with what it does, it also has a $3.3 trillion market cap. So the market cap is essentially how you value the company. They take the amount of shares that are out and then they times it by the price per share. And then it will give you an overall value of what the company is worth.
It is a simple mathematic equation that equates that. But I like to put the cherry on top. It is the public market that determines that. Like you said, it's the price per share. It's supply and demand. If I'm a buyer and you're a seller, between my bids and your asks, that's what determines a price. So by the public market determining the prices of these shares, we are essentially determining the market cap of these companies. I know sometimes there's kind of a little bit of a stigma that goes with some of these companies that they're just $1 trillion companies. They're all these big corporate monsters, but it is the inclusiveness of the stock market and everybody's participation in it that creates that value. One thing we like to point out is when you're kind of diversifying your money and trying to split it up so you don't have all your eggs in one basket, you look at different sectors. Just to rattle off a few, there's tech, there's energy, there's healthcare, pharmaceuticals, finance. It's basically just categorizing different areas of stocks. We talked about ETFs in previous episodes. You could have ETFs based on sectors. You just want to get into finance. You think that's going to be the power play over the next year. You could just buy into the finance sector, and through a finance ETF, you'll get your little bits of JP Morgan, Goldman Sachs, all the banks that we spoke about last episode, and you get it under one umbrella. So
also too, with the ETFs, you can even buy ETFs that invest in different sectors of the market. So also they could be picking up, let's just say, healthcare, energy, and tech. So now this also creates more safety, because let's just say, okay, the energy sector is getting a little hit, but the healthcare sector is like taking off. So it can balance itself, or even the healthcare could be pulling most of the weight for it. So it just, diversifying is always nice, because when one thing is doing bad, something else can make up for it. And it keeps you in a very stable position.
Stable is the perfect word. It's almost like a team environment, a chain with all its links that are strong. When one is down, the other pulls the weight. But when one is down, it's important to continue building your position. So I mentioned the UPRO. Some of the episodes prior, we mentioned some of the same blue chip stocks that we're investing in. However, there's no way that you could just invest in something one time and maximize your opportunity that you could see from it. You need to continue to build a position whenever these companies or assets are down. So looking at the UPRO and looking at the market health, whenever there's bad days in the market, if there's just a little bit of a economic downturn, market news that brings the market down, build your position on the weaker days. Just add to the foundation and add to your position what you already have.
Exactly. I mean, you can't build a house with one piece of wood.
That's a great way to look at it.
I know we will say it a million times. There's always opportunity. You just have to look for it. And on these opportunities is how you will make money. It is how you will just build your future.
It is. It's building your future, and you have to invest now to build your future. This week has been what I like to call an authentic slow burn rally. So at our last episode, we filmed last Friday, we did reach a record high, and essentially every day this week, we have been slowly pushing just a little further into record territory. We're not going to see some big blast out days. We could, but we're going to see more of these timid days like we have been. Constant little 0.2 up, 0.3 up the next day, maybe down 0.2 one day, but a slow burn, a very slow burn. You figure, just reference it to like a show like Game of Thrones or Ozark. There's always something going on. You're always maintaining your interest, but it's just a slow pace to the actual fruition of what's going on. There is a more boring pace to the market. The election, as an example, Federal Reserve cuts. We spoke about the earnings season ending in the last episode. So there's not a lot of major news moving the market, and it really starts to become what I like to call a market of stocks as opposed to the stock market, because it is just an open, free market of companies. And, they might not be doing anything majorly specific now, whether it's on a generalized macro market view or company specific. But in these environments, we're still investing and we're still looking for opportunity, and there's still opportunity to be found.
Also, too, with investing and with different markets, I also want to say we do like to look at the crypto market also. Certain areas of it can be smart. I do believe there are a lot of cryptocurrencies that I would personally stay away from, or I would get in and out. I mean, trends are never a fun thing to hold on long term. There is good news in the crypto market, because as I can go back to Coinbase and Trump, he says he's going to be a pro-crypto president. So I think there's going to be more opportunity to invest in the crypto market. And also, Bitcoin hit over $100,000 worth of a coin. So
huge milestone. It creates a lot of interesting perspectives in the crypto market. Just to preface my comments by saying we are involved in the crypto market. We do hold crypto holdings, but it's not our bread and butter. It's not our main focus. But with a lot of the news in the crypto market currently, we wanted to speak on it. So at 100K per Bitcoin, That brings its total market cap to just over $2 trillion. So I know there's a lot of excitement, not only in Bitcoin, but other altcoins, they call them. I just think that's exactly what it is, though. I think it's excitement. I would like to just do some practical math. If $100,000 Bitcoin over the next 3 months, say, went to $150,000 Bitcoin, that's adding $1 trillion in market cap, like we just discussed, in what is the total market cap of Bitcoin. And that's just impractical to me, if I'm being transparent.
No, yeah, it really is.
You're not going to generate $1 trillion of appreciated growth in 3 months. And if you do, it's because of hype. And with all the institutional investing now, if a big net worth investor, say he has $20 million and he takes 1%, which he would, of his net worth, that would be 200 grand, and he would put that in the crypto market, and then in 3 months he got 100 grand on that, he's going to take his money out. Like, that's how those people think. I think we're going to see a lot more excitement than practicality in the movements ahead.
No, I don't disagree with that. And also, like you said, adding a whole $1 trillion of evaluation, that is just insane. I mean, even just looking at companies we've named, Microsoft's worth like $3 trillion, and no offense, they do a lot more than Bitcoin.
Yes, Bitcoin is coming to fruition in the sense of its practicality and its usage in the world. I do want to say, with the coins that we're investing in, they're all meant to have utility use of some sort. There's value in the way the coins are used, not because it has a name. Just to reference Dogecoin, there was a time and a place when Dogecoin was something everybody talked about. And at that time, it was a great trade. Mm-hmm. But it's an impractical crypto. The idea of cryptocurrency is to get away from fiat cash, regular consumer money. But Doge, there's a limitless supply that can continue to be created, just like American dollars at the Federal Reserve. Yeah, it's not different.
I looked it up earlier. They say about 14 million Doge is mined every day. So it's just creating more supply, more supply, more supply. And there's just not even enough money eventually to invest in it. There's no cap on it. I believe Bitcoin has a little bit better of an investment standpoint because 19 million, I believe, coins that will ever exist. You can't make any more than that. So that gives it more of a value, as to where Doge, you can just limitlessly mine it. And then, again, it's the same thing as cash. You're not getting away from it. It will create inflation.
Oversupply of anything, money especially, is what creates a devaluation in that asset or whatever it is you're talking about. Mm-hmm. And just to use the numbers you had just pointed out, they're minting 14 million new coins a day. So at 50 cents, I honestly have not checked Doge price because I'm not concerned with it. Mm-hmm. But it's roughly around 50. We'll just call it 50 for math's sake. 14 million a day at 50 cents is 7 million a day. So if you're investing, just say $1,000 in the coin with the idea it's going to appreciate, how is it going to appreciate when there's just more of it every day to overcome? Like I don't mean to ramble. It just, Doge does not make sense. It was a meme. No, it was a joke. It was a good trade 3 years ago.
I agree. We both got in. You got out at a smarter time than I did. I was a little naive. I liked it because I could make money off of it. I think that ship has sailed.
Even with silly trades and silly assets, Doge is a meme coin. We could go on about GameStop and AMC. I don't want to get opinionated really. Yeah. However,
that'll be for a whole nother episode.
That is. So even within the silly stuff, there is potential to make money on a good trade, but you should not have your eyes focused on something like GameStop or Doge saying, this is my opportunity.
Exactly. Perfect example, it is a castle in the sky. You just assume that someone is always going to pay for more for what you have, but there will get a certain point someone doesn't want to, and then everybody will cash in because they want to make their profits. It'll crash the market.
Yeah, they're called bubbles and they're also called euphoria trades. Euphoria, to define it, means an overwhelming sense of joy and comfort. So if I bought something today and tomorrow it was worth almost double what I bought it yesterday, why would you think the next day would be any different?
Exactly.
So it's easy for anybody to get caught up in that. We are human. That's a nature of humanity. It's not a nature of investing. But being that we're discussing our insights on investing, we're trying to say, just keep your eyes open for that kind of excitement.
You do have to be careful because you can take advantage of it. But you can also lose a lot of money doing it.
We can. And in a risky trade, it needs to be perfect. But in a safe trade, you just need to be aware of what's going on. Like I said, we look for utility use. We look for practicality use. And where we find that in the crypto market is Bitcoin. Ethereum is my favorite. Cardano, Matic, and Mana. Those are the 5 I own. It's not going to go any further than that.
But also, too, you do have to look at market caps again, because some of these coins are in like the billions. So it's not just going to be worth $1,000 one day because, Bitcoin did it. Realistically, the money's just not there. You would have to have like everybody investing in it in the world. It's just...
Nick used the perfect words. The money is just not there. So in the example of Bitcoin going from 100 to 150, that would be $1 trillion added in market cap. It's not like people need to spend that actual $1 trillion, but they need to bid up the asset that high. I think we might see a slower grind higher in the crypto market, but I think a lot of it is excitement right now. And I think that excitement is following just a cute little milestone. 2-3 weeks ago, we said the same thing when the S&P crossed 6,000. It's cool. It looks hot. It looks sick, awesome. But it really doesn't mean anything.
But also, I do also believe if you're looking at Bitcoin, I feel people use that as an index for the crypto market as a whole.
That is, yes, a very, very valid point. I agree with that 1,000%. If we went on Thanksgiving dinner and sat down with our parents or grandparents and said crypto, the one word they would associate it with is Bitcoin. So it's a very valid point.
I mean, I know I even use it. And if you look a lot of the time, when Bitcoin's up, most of the time the market's falling right behind it.
It is.
So also that is a hype thing too. Everybody thinks, I got to get in. So just be careful because you can burn yourself.
Yeah, crypto's just got around, so don't feel like you're going to miss out. And I would like to just, again, if we're discussing the efficiency and practicality of using crypto, here's my favorite example of discussing the power of the crypto market. I'm Italian. Let's just say I had a grandmother in Sicily right now, and on Saturday afternoon, some crazy financial emergency had come up. I would have to wait until banking hours Monday morning. If it's not a holiday, I would have to schedule a wire. I would have to pay for that wire to go, and then within the wire, it would need to be changed as far as the currency. She would need the euro. She would need whatever it is that she's going to use over there, and with crypto, on that same Saturday afternoon, you could just press that button and it will send the crypto over immediately. So, in what could take a 3 to 5 business day transaction for an emergency, and all the fees you're going to spend sending the wire, converting the currency and everything, you just spend your gas fees to get it there now. So that's the importance truly in crypto.
Yeah, the convenience of it. Also, too, one thing that is a positive with the crypto market, it doesn't ever close. It doesn't close for holidays. It doesn't close hours.
Ever.
It's just always going. So
that's my favorite thing about the crypto market. I mean, I said it vaguely last week. I like to just watch the market move at all hours. I think with tens of trillions of dollars invested by the entire globe, we don't need a weekend off. But like I said, I'm not deciding how that gets run.
It's fun to watch markets, like we were saying the other week. After hours trading, it's just fun to know what's going on.
It is. It's exciting to watch them move, and when you're invested, you're watching your money move.
Exactly.
So
I think that's the real joy of it.
You keep your equity going. We are glad that you tuned in for another episode. Next week, we will continue giving you the steps to get involved in the market, the steps to feel confident in your money, and just giving you insight on how we did it, because we did do it, and you can do it too. So thank you for tuning in. Feel free to follow us on all of our socials. We're on Facebook. We're on Instagram. Soon we'll be on TikTok.
Yeah, working on it.
But thank you. We'll see you next time.
Yeah, see you for episode 6.